Today's episode of Market Talk is brought to you in part by GrowMark FS. Keeping up on the latest in ag is a challenge to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And good afternoon. Welcome into Market Talk for this Tuesday, August 10th, as we are live from the Cattle Industry Convention in Nashville at the Opryland Resorts. I'm your host, Jesse Allen. Thanks for joining us here today. As always, making us part of your day. Find us online. MarketTalkAg.com is our home on the web, and you can also find us. All of our social media links are there: Facebook, Instagram, Twitter, you name it. Join the conversation with us there. Find all of our streaming sources as well. All online, MarketTalkAg.com. One busy day here at the Cattle Industry Convention. We'll talk more about that coming up later on in the show as we spoke with Ethan Lane from NCBA earlier this morning. We'll have that interview coming up. But first, we got to focus on the markets, and let's bring in Jim McCormick with agmarket.net joining us here today. And Jim, good afternoon to you, sir. And looking at the markets today, that soy complex, I think that's a good place to start. That was strong pretty much throughout the entire day. It didn't end up being the leader completely. Wheat had a good move, but soybeans overall pretty strong from the overnight session into the day today and through the close.
No doubt about it. That's all China demand. We've seen China come in the last couple of days. We've seen some purchases, nothing fantastic in volume, but we're starting to see those purchases, folks. And Jesse, I think that's a good sign that maybe we're, quote unquote, hitting some value going into harvest. China sell purchases have been running a little bit behind, and now they're starting to pick up a little bit. That's a good sign. Worried about the crop is also a little bit concerned. Talking to customers in parts of Illinois and Indiana today. Too much rain, a little bit of disease problems, and that may be putting a little bit of weather premium back in the market as well.
Well, and looking as well here, Jim, looking at the crop ratings that came out yesterday, I know that was a big point of discussion, especially on the Illinois numbers, 11 percentage point gain, corn and soybeans. And one has to wonder how that impacted the trade today. And I know the corn market was down just pennies. I mean, we didn't really move much in the corn market today, but overall, those crop ratings, at least on the soybean side, what are your thoughts on how that impacted things soybean-wise first?
Well, I think overall, kind of a little bit positive rating. I mean, the fact is the crop in the northern corn belt continues to shrink, and the market was reacting to it. The corn number, I think, definitely caught the trade's attention, especially in Illinois, like you said, 11-point jump. But I think, folks, the big reality is it was probably due. I think the crop rating started too low in Illinois. We were off to kind of a rough start. And if you look just historically, ratings tend to decline throughout the growing season. Very seldom do they go up. And I think what you kind of saw is, in general, was probably a course correction. We have a lot of customers here in central Illinois, parts of northern Illinois that had plenty of rain, and they are very optimistic of a crop. If not a bin buster, very close to a record crop. So I think the ratings after that revision, even though it was a surprise, it's probably relatively accurate for the state.
Looking at the corn market here today as well, I mentioned down just pennies, and I think a lot of traders are really just kind of gearing up. We had a fairly quiet day yesterday as well. A lot of traders just gearing up for Thursday's reports. What is your thoughts on, as we head into the reports, we're getting more private estimates out, what we could see? It feels like most everyone is estimating both the corn and soybean crop a little bit lower on average. What are your thoughts as we head towards Thursday's WASDE?
We're in that group as well, Jesse. We think the corn crop is going to get a little bit lower. We've actually got a spreadsheet. If anybody's interested, kind of go to the report at agmarket.net. You can see it. When we run the numbers, plain and simple, it's very hard to get a trend yield at 179. We're plugging in record crops for Illinois, Indiana, and Ohio. And the fact is, those acres, Minnesota, the Dakotas, equate about 18 million acres of corn, and they're just going to drag this national yield down. Same thing for the beans. We don't expect much adjustment in the beans. I think the average trade guess is about a half a bushel decline in the beans. I would not be surprised if they do nothing in the beans on Thursday. The one thing I think, Jesse, that's got everyone a little bit hesitant about this report is not a field report. This report is driven by farmer surveys. A year ago on this report, they jacked the yield up, I believe, about 3 bushels. And then over the next 5 months, they proceeded to take about 9.5 bushels off the crop. Now, we know part of that revision was due to the deratio that came through a year ago today. But, I don't think all of that revision was just due to the ratio. So I think people are a little bit skeptical about what could come out of that number on Thursday, hence the relatively tight trading range. Heck, Jesse, if you look at that corn market recently, I think we've traded the price of 550 corn, I think something like 15, 20 times in the last month. It just will not go off of that price point.
It will not move off that price point. And that's a great thing you mentioned there, Jim. And, to your point, what do I do as a producer here going into this report? I feel like there's a lot of talk about defending positions, especially as you look out even into 22 and doing some marketing for next year, just for the simple fact that what if USDA comes in with a number here off these farmer surveys that is way, way off from what everyone is thinking, and it sends the market lower because you got to think about it. And I'm sure you would probably agree, if you're selling 550 corn or whatever, 520 corn or whatever, and that's your worst sale, I mean, that makes sense to me.
No doubt about it. I was talking to some producers about it today. There's some producers that haven't sold a lot of grain. We were looking at the September short dated puts, Jesse. They go off on August 27th. Relatively cheap, under 15 cents for kind of an at-the-money put. That'll get you through tomorrow's report. But also what's going to be interesting is we do have the Pro Farmer Crop Tour next week. And that is always going to be an interesting one. They're going to go through some of the best parts of the Eastern Corn Belt. They're also going to go through some of the worst parts of the Western Corn Belt, potentially. So it's going to be a lot of volatility. So that put can accomplish quite a bit. It's a short-term put. So it goes off in a couple of weeks. And what it does, folks, is you're giving the right but not the obligation to sell December corn. So you're essentially putting a floor under your new crop price for the next couple of weeks. If the market gives us a bullish report, which I think the potential is there, you're not spending a lot and you haven't committed to the elevator. But on the other hand, it is the USDA. And the reports have been incredibly volatile. And if you remember what we've done, folks, this year, we've had $3 limit moves in the beans. We've had 3 or 4 limit 40-cent moves in the corn. These report days have been very, very volatile. If you want to lay off risk, puts, short-term puts are one good way to do it. Low risk, but allows you to sleep a little bit better going into that report.
Jim, I haven't heard a lot of anyone talking about still holding any sort of old crop, but I believe I saw a tweet earlier this week, or maybe it was last week, you talking about that. If there is anyone out there, I would have to think that now's the time to move that out of the bin and get it gone, wouldn't it be?
That is what we're hearing right now. For the most part, folks, if you've got old crop corn or beans, we're to the point where either the elevator is just going to say, I don't need it, or they've got everything, they've essentially hit all their purchases per se that they need, they've got their needs covered, or they may get to the point where they just say, the heck with it, I can't get enough to justify running at the current rate, so I'll slow my rate down to 50% and just try to get to next year. So the premiums are still relatively well. We do think that basis will start to slide here. So yes, if you have any old crop grain, I would recommend go ahead and getting it moved. You're going to get rewarded. It's definitely a good price, especially if you consider where it was a year ago going into the fall. So don't feel bad about it. Take your money and move on to the new crop marketing year.
Especially August soybeans, 1447.5. I mean, if you look at the cash price of that, depending on where you're at, it's a pretty good number there, Jim. I would definitely think you have to make some moves there. On the wheat side, we had a really good day today. Chicago KC wheat, double digits higher, and even spring wheat looked good. Talk about what you're seeing on the wheat market here as we work through Tuesday and as we head into that WASDE report.
Well, what we're looking at, plain and simple, is the world supply is getting tighter. Russia crops continue to shrink back. Prices continue to rally. The Canadian crop continues to shrink back. We know the U.S. crop is shrinking. So the fact is the world wheat supply is tightening. And we're essentially trying to get in a ration. But the world is very, very concerned about food pricing right now. The Egyptian president last week was talking about raising the price of wheat for the first time, get this, since 1977. To give you an idea, so he's really walking out on that political limb to do it. But the fact of the matter is they cannot afford it. The price of wheat is getting too high. This inflationary play that we've been talking about for a long time, I think, is still at risk. If you look what happened in the outside markets, cotton, sugar, cocoa, coffee, they all continue to rally. And that's driving some spec money back into the market as well as people try to hedge off this food inflation that looks like it's going to come. We believe it's going to show up in the corn market eventually. Now, the corn crop, it's up for debate. Is it a 179 yield? Well, the fact is, folks, you can lower this corn crop by 2 bushels. That's the average trade guess. And it still would be the best crop ever. And you think, well, wow, that's incredibly bearish. But here's the reality, folks. When you look what's going on in the world, the Brazilian crop is estimated at 93 million metric tons last month. CONAB, the group out of Brazil, Jesse, put it at 86 today. So you think about where that crop is, that pretty much is going to cut their exportable supply in half. Okay? So essentially, when you do the numbers, that's about 400 to 500 million bushels of corn that they normally would export that they're not going to export. And you look at our government numbers. Now, we're going to get the updated concept on Thursday, but right now the government's saying we're going to export 350 million bushels of corn less this current upcoming year compared to the year we're just finishing. So if you think those numbers hold tight or very close, think about that. That is 400 million out of them, 350 million out of us. Where in the world are the importers going to get grain from if they're not going to buy it from us and they can't buy it from the Brazilians? That's where we believe the USDA is wrong. The demand is going to be there. It's going to be like last year. It took a while for them to admit it. The demand was there and the market was explosive. I think you're going to see the same situation. We saw a counter-cyclical rally in wheat harvest, and if this corn crop starts to shrink up and the Chinese start buying, you're going to see the same thing happen in the corn market, I believe.
Jim, I want to leave time for livestock. Of course, I'm here at the Cattle Industry Convention. A lot of talk with cattle producers this week about the markets and everything going into those. And you look at cattle today, fairly mixed to slightly higher. I know the live cattle market looked decent. What are your thoughts in cattle here as we get into this week and work towards Thursday's reports?
Well, I think in general, the cattle market's holding in there pretty well. I mean, I was a little bit nervous with this COVID virus really running rapid. Was that going to hurt the demand and all that? But the fact is, the box beef continues to be on fire, and that's a good sign for demand. So I'm relatively optimistic on the cattle side of the equation. The hog market, I'm a little bit more concerned about. You look at where the prices are. The supply is going to build going into the fall. Chinese demand looks a little bit questionable. They're rebounding their supply. So the hog market's definitely going to struggle. But like I said, the cattle market, I'm a little bit optimistic on at this point.
Well, you mentioned the hog market and a rough day Monday. It was better today, but really, I think a lot of hog producers were looking at some of those numbers yesterday, and we came into the week thinking we were going to be solid, and then we had a real rough day on Monday. So it's interesting to see the dynamics in the hog market right now as well.
Well, there's no doubt about it. And I think a lot of that has to do with China at this point in time. The demand is waning for China. Their hog herd has rebounded quite a bit from the African swine flu. They're also doing some lockdowns, trying to control COVID, and that just has kind of got a negative attitude. I think throwing the building supply for us as anticipation, that's just kind of put a kind of a wet blanket on the hog market, at least temporarily.
Jim, any other final thoughts you have for us here on this Tuesday?
The only thing I can tell you, folks, is we prepare for another volatile day as we come into this market. One thing, keep an eye on the Geese 22 corn and the Nov 22 beans. Our group has actually started encouraging people to take a serious approach. Start thinking about marketing for next year. The prices are well. Break evens are, where you're selling compared to break evens, folks. It's a pretty good jumping off point to start. The one thing we don't know about is where we're going to be 6 months from now. If anything told us this year how volatile it can be. So when you're not sure, go back to the basics, and that is locking in profits.
Well, Jim, I know if producers need a little advice, they can connect with you and the team at agmarket.net as well and find out more on the app. And a lot of ways to connect with you guys and get some vital information, isn't there?
That is correct. Like I said, go to the agmarket.net app. We got a great little video talking about how we're coming up with our guesses, our estimates for the production. We got a table that you guys can run with. So if you have any questions, just go to the webpage.
Jim, appreciate the time. Thanks for joining me here on this Tuesday, and we'll talk again soon.
Thank you.
Jim McCormick with agmarket.net, our guest today here on Market Talk. Find us online, markettalkag.com. This has been the Tuesday, August 10th edition of Market Talk. I'm Jesse Allen. Have a great afternoon.